Hello, my name is Mike Swanson. I run the website WallStreetWindow.com, and the odds are you're here because you got an email from me telling you that this video is up. And if you're not on my free email list, you need to get on it to get the next update, because I send one out just about every single day before the opening bell, and it'll contain all the news stories that I got my eyes on and a blog post for me with trades and ideas and what I think is important. But today I want to talk with you about AMC stock. Stock had a huge run. It's attracted massive attention from people. It's now, I'll show you, it's one of the most widely owned stocks among small traders, investors who got into the run. And it's been promoted nonstop on message boards. And frankly, the stock has not gone up as much as people expected it would when they bought 4 to 6 weeks ago. And it's actually been dipping and dropping when they were promised it would go up. And there's people out there on message boards saying that, look, the reason the stock is not going up is because it's being manipulated. Last week on the message boards, on Reddit, on TikTok, Twitter, StockTwits, all over social media, a theory was posited that hedge funds are operating inside the bond market by doing strange transactions with AMC bonds to make the stock drop. Is this real? And if it isn't real, then why isn't the stock going up? Well, I'm going to look at these two questions with you so we can understand what really makes stocks move and what is likely to be the next move in AMC stock. And I'll give you a way to benefit from it without taking a lot of risk. I'll talk about a trade that I got on the stock. So let me share my screen so you can see what I'm looking at here. Now, this is Robinhood, and I've got a small Robinhood account almost solely so I can track this. This is their 100 most popular stocks. It's the 100 most owned stocks listed by the number of Robinhood customers who own them. And there's millions of new Robinhood traders that are having a huge impact on the markets. I did a video Saturday showing how 25% of the trading volume now on the stock exchanges is coming from small traders. Well, AMC is number 3 on the list. So that gives you an indication of how many people are in this stock. It's like if you think this is a pyramid scheme and everyone's in the pyramid, basically, once you get to a stock up this high. And that's why so many people are worried that the stock isn't acting the way they expected. It's not going up the way they thought it would. Well, the theory out there, and this is covered on SeekingAlpha in a really good article. I'm going to link to it in the comments with this video so you can read it if you so desire. But it talks about how these rumors and discussions about bond manipulation exploded last week to explain it. Now, this is Vince Martin. He's been writing since 2011. He's a credible person, and he points out why this is fantasy. This is just complete nonsense being generated by people who have no understanding of how the bond market works. You really can't manipulate stocks, through bonds. And it would take, and one reason why is because it takes so much money to move bonds that it's unbelievable. If you think it takes money to move stocks, to move the money in the bonds, it takes even more. It's big money in the bond market. In fact, the bond market globally is in fact bigger than the stock market. And it's a laughable theory. And you can read the article for the whole debunking. But if we go to the chart itself, the stock was under $10 in early May, jumped up to above 70 briefly. And people were thinking, oh, this is the start of a short squeeze. I got to get in this. It's going to be like GameStop. Well, what happened with GameStop? When GameStop hit 500, it peaked out and went right back down. People who thought GameStop was going to 1,000 or 5,000 or 10,000, they were dead wrong. Just as people who thought this move up to 70 could go to 500 ended up being dead wrong. You see, charts and trends matter. When something is an uptrend, it's making higher highs, higher lows. But when that pattern stops, the uptrend is over, and that's why the stock is no longer going up like it was in May. And in fact, it's completely unreasonable to expect the stock to go up, above 100, I would say, at this point. And the reason why is valuations. Valuations are things not talked about on the message boards. It's got a market cap of $21 billion, and it loses money. It loses $15 a share, and it has so it's got a negative PE, but worse, it's got a price to sales ratio of 20. All right. I've had businesses in the real world. I've been trading the stock market since 1999. This book came out in 2010. So it's a classic. You can go to Amazon and check the reviews. I say this to say I'm not a guy on Reddit. I'm not a message board guy. I'm a real person with experience in these markets. I'm not posting anonymously. I'm not talking nonsense. I actually managed a hedge fund for 3 years. I know what I'm talking about. These people you see on message boards, they're hyping you up. They're misleading you in these stocks, and don't fall for it. Because here's the deal. If you're in the real world and you were to buy a real world business, which I've done, you are going to want, it's like you're buying a house, okay? You're going to buy a house, you want to pay a good price. If there's a house that was worth $150,000 a year ago when it last sold, you don't want to spend $2 million to buy it. That would be a bad investment. Well, this stock has a price to sales ratio of 19.66. In the real world, you want to buy companies with a price to sales ratio of 1 or better yet, 0.5 if you want to bargain. In fact, that's how Warren Buffett would invest in companies. The point of that is to say that at $42, this stock still has a huge, crazy valuation. So if it was to go to 100, it would be even crazier. It's already one of the most highly valued stocks on a fundamental basis in the entire stock market. Already, even at 42, it's got a market cap of $23 billion, and it has a negative 412% operating margin, a revenue of only $449 million. It lost close to $1 billion. It lost close to $3 billion last year. It's a money loser, a massive money loser. So you're being hyped up by people telling you to buy this for a short squeeze. You're in a message board group. It's a herd is what you're in. And the herd behavior is what results in when the herd gets big, and it can only get so big because there's only so many people left that are out there to join the herd and buy the stock. That's why it topped on the chart. That's why it's now dead money and so forth. Now, I'm not suggesting you short the stock. I'm not suggesting you buy put options on the stock either. I'm suggesting that if you want to buy stocks to make money, you just avoid it. If you're in the stock with a loss, get out, realize the loss. That way you can put on your taxes. You can move that money into a better situation. If you go back at my last video, I talk about a stock I own that pays a 4.5% dividend that turns a profit. I talk about an entire sector that I'm investing in that I don't think is a flash in the pan for some trade that's going to go up, hoping a herd comes in for a couple of weeks, but something I think is going to go up for year after year after year. That's common sense. It's in my last video. But what about this stock here? I do have a position on this stock. It's a very tiny position, so it really means absolutely nothing to me. Don't think I'm making this video to talk up my position. The influence I can have on this stock is basically zero, and the amount of money I've got in this position is like a penny compared to the rest of my money. But the position I got is I sold calls on the stock that expire in 2 weeks. That are above the current trading price. I sold a set of calls. One is a price of 100, one, like I think it was 90. So when you sell calls, you're selling bets to people. And when the bets expire worthless, which is why I did it, you keep the proceeds. I also bought calls above the ones I sold just to hedge my position in case I'm wrong. You know, it's insurance. This is called a bear call spread. You can type that in Google, look it up. It's a good trading method in situations like this, where something runs up crazy and you just want to make a small amount of money selling to people who are blindly buying calls out of kind of madness. Yes, you can buy calls and make money when you got a good stock situation before it makes a big move. But after it makes a big move, it's really too late. You want to get ahead of the curve. That's what trading is about. You ever heard of the phrase, buy the rumor, sell the news? That's what successful trading is. Buy the rumor, sell the news doesn't mean after the stock's gone from 10 to 70 and it's on CNBC and everyone on these message boards is talking about it. You buy, that's when it's too late. You want to get in early. That takes research, that takes reading, it takes following stuff, you know, getting involved in a few good sectors with real long-term trends behind them instead of flash in the pan meme stocks and message board hype. I denounce those people on Reddit who have, if you're listening to this, who got you involved in this stock. Get out, sell, just take the loss. Who cares? Move the money and put it to work in something going right. That's what I'm here to tell you. I don't think anyone else is telling you that. You go on YouTube, type AMC stock. Every other video is from people hyping it up because they know that's what's going to generate views and get people to like their videos to watch more of them. No, I'm here to tell what I think is really happening, and it may piss off 9 out of 10 people that watch this video, but that one person will learn from what I'm saying, and then they'll be serious. They'll buy my book because it takes being serious to win in these markets, and that's what I'm all about. Helping people really succeed, not get caught up in something like this AMC stock situation. Avoid that. And the whole story about manipulation in the bonds, complete nonsense. The article below, read it. It'll dispel it for you if you've heard that and thought it's credible. Absolutely not credible at all. Absolutely not. These markets have so much opportunity in them when you take them seriously and align yourself with trends when they're early or when they're just starting and not after they've run their course and everyone's in it and it's the number 3, 4 stock on Robinhood and everyone's in it. It's too late when everyone's in it. You want to get in things on the bottom of that list or not even on that list yet. That's how you succeed if you want to use Robinhood. So anyway, those are my thoughts for today. And I'm glad you're here. And one other big thing I got to tell you too. Stop the share. Okay. So if this is the first time you see me on YouTube, like this video so I know you're there, and then click subscribe right here. Subscribe, and then click the bell next to the subscribe button. That way, YouTube will send you a notification as soon as my next video is up. The last video I did has got a stock I own in it that's paying a 4.5% dividend. I get idea. It's just, this is time. Hit subscribe, hit the bell, and I'll be talking with you later.